This content is for educational and entertainment purposes only. It does not constitute investment advice.
Have you ever wondered why breakouts sometimes start at the weirdest, most random spots? Or why price finds support or resistance at levels that don't really make any sense? You mark the clean highs and clean lows, and still, price reacts somewhere random. Not once, but over and over. Almost like price knows something that you don't. You see, markets have a rhythm. In patterns, yes, but also in how far they tend to stretch before snapping back. Push too far and the move exhausts. Don't push far enough and there's no follow through. There's this invisible tension, a threshold that price seems to respect, and it's not always discernible by looking at market structure or key levels. Most traders look at charts and see key price levels and market structure, but behind every single move is math.
Statistical tendencies,
probabilities, and behavioral thresholds. Things no one talks about because you can't really see them, but they are there and they shape how far price goes before it finds resistance, before it breaks out, and before it reverses. But here's the kicker. Even once I had a hunch these invisible forces were shaping price, I had no idea where to start looking for them. If you're like me, you can feel these forces moving the markets each and every day, but try to measure them, try to pin them down,
candle by candle,
day by day. It's like knowing the rules exist, but not knowing what game you're actually playing. Though I did what all obsessed traders do. I tried everything. Bollinger Bands, VWAP, ADR, ATR,
and even MACD.
And for a while, with each of these attempts, I thought I was onto something, but every theory fell apart the moment I tested it across different sessions. Some levels would line up surprisingly well, but most wouldn't. And the ones that did, I never felt like I could really trust them twice. Every time I thought I found a pattern, price would just blow right through it the next day. Like the market was mocking me for thinking it could be boxed in. I had dozens of charts, hundreds of screenshots. Eventually, I hit a wall, and too many late nights to count, and nothing consistent to show for it. I actually said to my developer that maybe this whole thing's in my head, and I'm just seeing patterns where there aren't any. But then he looked at me and said something I'll never forget. You're looking for price to repeat patterns.
But what if price is just reacting to statistical distance?
And that phrase stuck with me. Statistical distance. Not patterns, not levels, but the space price travels, measured from one fixed point. And suddenly, everything snapped into focus. What if it wasn't about the candles? What if it was about how far price had moved from the session open in percent terms? Not structure, not lines, but distance. I kept thinking like a technician, looking for levels, structure, reactions. But then it hit me. Every trader, whether they know it or not, is tracking one thing. How far has price moved the day? Green or red, up or down, from the open. It's not just a performance metric, it's the anchor for the entire session. And what if price wasn't reacting to lines drawn on the chart, but to statistical zones based on the distance from the open? So I put forward a hypothesis. Price breakouts and rejections that happen out of nowhere can be explained by intraday deviation. Or put simply, those random price moves are always random. They're just price hitting a behavioral boundary. So I started testing my hypothesis. No code, no tool, just me in a percent calculator. I'd mark out all the behavioral boundaries I could think of. 1%, 2% from the open, even 3% from the open, on both the upside and the downside. And something strange started to happen over and over again across completely different assets, sessions, and conditions. I noticed that price would sometimes significantly react at these behavioral boundaries. Not exact to the tick or the pit, but close enough that these boundaries became really important for me. I was seeing statistical zones, not classic support or resistance lines or trend lines. And these zones weren't based on structure. They were based on statistical reach. I started marking these boundaries every single day. And it wasn't too difficult, just a calculator, the open price of the session, and some clean horizontal lines. And honestly, I started to find a rhythm with this strategy. These levels helped me anticipate moves that used to feel completely random. But I realized I can only go so far with this strategy when doing it manually, and there was always one thing missing, a way to measure which boundaries actually mattered. I realized that not all percentage moves are created equal. Some get ignored, some spark breakouts, and some stop price right in its tracks. And no matter how many charts I looked at, there was no way for me to quantify this manually. This level of insight requires data, history, but most importantly, automation.
So I brought the idea to my developer and I told him everything I was seeing.
The rhythm, the reactions, the zones that just kept showing up. And I asked him, can we build something that tracks this? Not just for today, but across hundreds of sessions. And he told me that not only can we build it, we can make it learn. A few weeks later, my dev sent me the file. No big announcement, just a message
that the indicator is ready.
And as soon as I got my hands on this indicator, I dropped it on the chart and just sat there. All the zones I had been manually tracking, they were just right there. But more than that, there were levels I missed.
Levels I would have never thought to mark.
I strolled back session after session with these same invisible boundaries filling up again and again. And that's when it hit me. This wasn't just a tool. It was a visual map of where price tends to react and how often. Not based on structure or indicators, but on statistical probability. Levels probability IQ is a custom trading view indicator, and access is available through our affiliate partner exchange. All you need to do is register, it's completely free, and that unlocks access. It's an affiliate setup, so we may earn a commission if you trade, but there's no extra cost to you, and no trading is required to get the tool. And when I first loaded this indicator up, I saw these clean horizontal lines on my chart, evenly spaced and both above and below the session open. At first glance, these levels looked pretty simple, but they tell a very important story. Each line marks a percent deviation from the open, 0.5%, 1%, 2%, and so on. These are the levels I had been marking out manually before I got my hands on this indicator. Right next to each line, you'll see a small label, the exact percentage deviation, which is 0.25% for this zone. But most importantly, right beside that percentage is the hit rate. This number in parentheses tells you how often price has reached that zone across historical sessions. And I realized that I'm not just seeing how far price has moved, I'm seeing how statistically often price has actually made this move. With this indicator, it's no longer just prices down 2% today. It's prices entering the zone that's only been hit 35% of the time and might have a tendency to react when it does. By now, you're probably wondering, okay, but how do I actually use this indicator? How do I turn these zones, these probability lines, into something actionable? Because seeing levels is one thing, but knowing how to react to them is where the edge really starts to form. And I want to share with you the most important strategy I've found while using this tool. This isn't financial advice, just what I've found works for me after a lot of testing. There's no guarantees in the markets, and there's no guarantee that this strategy will work for you. Now, I want to walk you through a hypothetical entry condition I personally look for when using this tool. And the first thing I do for this indicator is visit the settings and select the option to show all potential levels. Once the setting is activated, you'll notice that all of potential percentage deviations that have ever happened before are present on the chart, all the way up until 12.75% to the upside and even lower for the downside. Now, here is where we get a bit statistical, but I promise it's actually a pretty easy method to follow. What I personally look for is the upside deviation level that has only been hit around 25% of the time on price history. For this asset, that's a 2.75% upside deviation. And this is the level that I'm specifically looking at as a potential long signal. From here, I do the exact same thing for negative deviations. I looked for the level that has right around a 25% historical hit rate. And for this example, that's negative 2.75%. These are my personal key levels. From here, I mark the T level I identified to the upside and the T level I identified to the downside, and I wait for price to either increase and hit my upside key level or decrease and hit my downside key level. Now, price does increase on this session and hits my 25% level. And once my level is hit, I personally look for a stop loss that is about 2 to 4 lines away from my entry level. And this ends up turning into a stop loss that is anywhere from 0.5% to 1.25% away from my entry level. Now, for this strategy, I personally do not use a profit target. Either price hits my stop loss or I close the position at the end of the session. So as price continues to develop and closes where this neon pink line is, this is personally where I would close my position at the end of the trading session. And the entire idea behind me doing this is to let this breakout breathe and continue throughout the day without me using too tight of a profit target. Again, I have to emphasize that this is just my personal way of using the indicator, and that's what I'm showing you. This does not mean that this is a strategy that will work for you. And for the downside, I personally look for the same criteria. I find the level that has the closest to a 25% historical hit rate, and I consider this my hypothetical entry level. From here, again, I look for a stop loss that is around 2 to 4 lines away from the hypothetical entry point, and then I look to close the position at the end of the session where the neon pink line is located. Again, this is just my personal strategy. I'm not telling you what you should do. I'm just sharing how I personally use this indicator. If you found this video helpful or you're serious to try Levels Probability IQ, don't forget to like, drop a comment, and subscribe with notifications on so you don't miss what's coming next. You can also follow us on TradingView and on Twitter. And don't forget to join our Discord server where we have active traders talking trading every single day. I'll see you in the next video.